5 years, a journey so grand, built on trust, legacy stands. With knowledge and vision, we lead the pace. A legacy built with strength and grace. With over 1 million, we stand as one. Our mission and vision never undone. In every field, in every domain, ICAI spirit prevails. We are the leaders, strong and bright, shaping the future, guiding the light. With strength and vision, we lead the way. Vasudhaiva Kutumbakam, come what may. Welcome to India, welcome to WOFA. Welcome to India, welcome to WOFA. WOFA, 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 WOFA.
Accountability meets innovation for people and planet. Global celebration. From balance sheet to the hopes we keep.
We rise together, our vision is deep. Your signature speaks, integrity shines. A promise to the world, vision that aligns. Together we rise, hand in hand, for a brighter world. We take a stand. We are the leaders, strong and bright, shaping the future, guiding the light. With strength and vision, we lead the way. Vasudhaiva Kutumbakam, come what may. Welcome to India, welcome to WOFA. Welcome to India, welcome to WOFA. WOFA, 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 WOFA. The Institute of Chartered Accountants of India welcomes you to the World Forum of Accountants at Yashobhoomi, New Delhi.
Hi, good evening, everyone, and welcome to this seminar organized by the CPE. I'm Supriya Pangarkar, your moderator for the day. The World Forum of Accountants is scheduled to take place from January 31st to February 2nd, 2025 at the state-of-the-art Yashobhoomi India International Convention and Expo Center in New Delhi. Building upon the extraordinary success of the World Congress of Accountants in 2022 and the Global Professional Accountants Convention in 2023, WOFA promises to be an unparalleled gathering of accounting and finance professionals from around the globe. So, do ensure to be part of WOFA. Today,
Ma'am, if you could
we are delighted-
please turn on your camera.
Today, we are delighted to welcome you all in the webinar being organized by the Continuing Professional Education Committee of the ICAI. It is my pleasure to be a moderator for the webinar on how to set up an export business, followed by TDS rates and its compliance in income tax. In a short while, we will start this webinar. First, I would like to appraise you about the CPE committee. In today's ever-changing professional scenario worldwide, the biggest challenge to professionals is how to stay on the top of their game while adapting to new requirements and norms. Therefore, it is imperative to aim to be up to date to offer unique guidance, influence others with their innovative approach and expertise. It is also vital to stretch old ideas beyond the traditional theories to create new perspectives. In this context, the continuing profession educational facilitates professionals to maintain, improve, and broaden their knowledge, skills, and expertise required to achieve their professional goals through webinars, seminars, etc. The program for this evening is as follows. We have two sessions of 1 hour each. First is how to set up an export business. The second is TDS rates and its compliance in income tax. Our eminent speakers will talk about the above mentioned two emerging areas of professional interest. I would request the speakers to keep their interaction in English because we have all the professionals who have joined from across the globe. I will now introduce our first speaker for the evening. Our first speaker for the evening is CA Irshad Khan. CA Irshad Khan is in CA practice since 2021 and is also in the editorial committee of the WIRC of ICAI and also has a sole proprietorship. His areas of expertise are digital marketing and more for virtual presence of CA practice as per ICAI ethics. How to become a consultant in your CA practice for your potential clients who want to set up and grow their export-import businesses is one more area where CA Irshad Khan is working. CA Irshad also has the practice area for Startup India registration and helping the clients to raise seed funds, private equity, angel investing, etc. He has got the Best Achiever Award from DGT Institution. He is also a winner in Innovative Excellence in Financial Advisory by ADP under World HRD Congress. These are a few of his many achievements. I request CA Irshad Khan to take over and start his presentation.
Thank you, ma'am. First of all, good evening to everybody. Good evening to the admin of this webinar, CA Supriya ma'am, CM Rajput, the technical team, and the entire participants. I can't count the numbers, but I feel there's a big crowd is there on the virtual world. So thank you so much to give me this opportunity to speak in front of you all people and share my knowledge. Since my childhood, unfortunately or by God of grace, I was the topper of my school and monitor of the class also. If any colleagues comes to me to clear the doubts of mathematics, English or any subjects, so I always love to help the colleagues and groups to share my knowledge, whatever the God has gifted me or taught me. So today I would like to start the webinar without wasting my time. So let me start the slides. I think this will be visible to everybody. If it is not visible, please click on the comments box. Thank you. So as I got only an hour to explain this, the big concept called how to start an export business. There was a time when the India was called as golden bird because in today's time, India is exporting only 1 to 2% of the entire globe. But there was a time many years back when India was exporting almost 70%, 65 to 70% as per the data available on internet, 60 to 75% to entire world because we are rich in resources, in natural resources. But why this number goes down, there's a big reason. I'll tell you in the webinar later. So the topic is how to export the business. What we'll study in this session? We'll study in this session two things. First is how to register an export business. See, I have chosen this topic. There's two reasons. If you are the member practicing, you can't do business along with the practice. But you have the chance to give consultancy to your client because everybody want to fly in today's world. At domestic level, doing business is not the easy cup of tea. There's a big competition. But at international level, if any client want to expand his business globally, then this idea comes into mind to export the product outside India. There's a many products, I'll tell you in the session. So if any clients come to your office, you want consultancy. So normally what CA do consultancy, they said, yeah, I'll do your company registration. I'll fulfill all the compliances, give you the certificate of incorporation by the government to you, and you can start your business after opening the bank accounts. This is the normal compliance area, what normally majority CAs do. But I will not give more time on the registration part, because in our profession, our institute has designed the syllabus in such a way like that we have studied a lot about the company law. So we know the taxation, we know company law, we know many things. So any CA doing practice, or whether he or she is in industry, he can easily register the business online. There's no problem. But I will allot my more time on the second part, that is called how to provide export business consultancy to client. If you are practicing CA, if you are doing job, you can also choose according to your options and desires and ethics of the ICI, considering everything. If you are not doing job, neither you are doing practice, you want to start your own business as a CA, so you can choose this business export of business. You can choose any product. In the session, I'll explain you how to choose the product, how to choose the market also. So 80% I will give the focus on second part. So let's finish the first part. Before that, I want to tell about myself. Everybody have known about this thing. The ma'am has explained about me, so I don't need this explanation to you. So I'll move forward on the first part. How to register an export business. In many countries, including India also, if anybody want to start the business, he start with this single mindset. Somebody goes with the partnership also, but majority of the people want to start by themselves. So they register a proprietorship form, open a bank account, take the GST registration, IC code, and other compliances. After they start doing the business. And if there's a two-person partnership firm, LLP, private limited company, any other way also. So these are the way by which you can register your company and you can start your business. If anybody don't know how to register the company, you can check on the Google how to register partnership firm, proprietorship, LLP, private limited. You will get n number of videos. So I will not waste my time here. So I hope this is comfortable for every member to do a registration, to follow the compliances in this company registration process. But I'll tell you a few things. What are the different things required in export business registration? The first thing you will require is IC code, that is called import export code. In normal language, we can say it is a export license, and you can register, you can apply online for this license very easily. In the slides, I have mentioned the link also, the website of DGFT, Director General of Foreign Trade. Within 48 hours, you will get the registration done. And second thing is required is GST, goods and service tax. The struggle is differ from state to state. In some state, you can get GST registration easily, but in Mumbai, it's not easy cup of tea. You have to struggle a lot to this scenario. And third thing, you have to register with the council, promotion councils. There's a many promotion councils are there. For example, if you want to export an agriculture product, rice, wheat, vegetable, any product related to agriculture activities, you have to register under the council called APEDA. 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 Under APEDA registration, you can register your company like you are going to start an export business. Your main product is agriculture product. Then government will give you a license. You can start your business. And for doing export also, for example, once you are doing export, you need one agent called custom house agents. On that, with that agent, with the help of that agent, they are the government registered agent. You have to clear all the papers along with your export product. On that time, this APEDA will require, IC will require, GST will require. You have to open one bank account. This is for normal proprietorship form. There's a many other registration also, but these are the compulsory registration you have to do by anyhow. Second is partnership, LLP, private limited. Registration is very common on YouTube. You can get so many lectures you can learn and things. These are the common things you have to know about the export registration business. As I said, you entity registration, GST, professional tax. In Maharashtra, professional tax also is there. In other state also is there. You have to register professional. It is optional, not compulsory for export business. Udyam registration, it's not compulsory, but it is advisable decision to register for Udyam because there's a benefits. There's MSME loan benefits are there. Government is providing. So once you have registered under Udyam, under manufacturing category or service provider category, then definitely you can approach government for the finance assistance. The government will help you definitely. And other registration also like PF, it is optional, not compulsory for export business. And IC, I have told you, for IC export import code, you have to refer this website. This is the website. You can take a screenshot also. On this website, just visit this website. You will get one template in PDF, step-by-step registration. You can do it. Second is FSI. If you're doing a food registration, if you're doing a food export, any product which is related in the category of food, rice, vegetable, wheats, anything, frozen product also, then you have to register yourself under FSI. In FSI, there's a 3 categories of license. One is registration. This is very simple. Second is state license. Third is central license. For registration and state license is not sufficient for your export business. Compulsory, you have to register under central license. And the fees is around 7,500 for Maharashtra people for 1 year. The government fee. This is the government fees. AD code registration. After doing all the registration, you have to approach your bank. You have to approach your bank. Please open my AD code registration. What is AD code? Authorized dealer code. For example, you have set up your business in India. You are doing business in India. You're getting foreign currency from outside India. For example, you are dealing with the UK. And your buyers then UK or buyers in USA. You want to send US dollar. For example, you have quoted $10,000 for your consignment. The buyers agreed to pay you. But how he'll pay? He can't transfer the $10,000 US dollar into your Indian bank account. It is not possible. You have to set up one foreign currency bank account with the bank. For that, you need AD code. With the help of AD code, your bank will open one bank account which will be in foreign currency. You can get any foreign currency from any country easily. And after receiving 10,000, in my example, after receiving 10,000 US dollar in your foreign currency account, the bank will immediately convert into your rupees. That will transfer into your rupees bank account, current account. So AD registration is very important. This will be done by bank. You can't do registration by going online platform or any website. You can't. This is the manual process. You have to approach your bank. Your bank will assist you to do all these AD registrations. And this will require to register on IceGate. IceGate a different site, because I have an hour, 60 minutes only, so I can't explain everything in detail, but I will try to summarize. IceGate is a site, this is government site, where if you, for example, if you exported any product, okay, and in export, there's a two type of GST payment. With zero thing, like you're not paying any GST amount, you can export after giving LUT, rate of undertaking. There's other option also, you can pay GST, later you can refund the GST. For that reason, you have to refer IceGate. IceGate will refund your GST amount into your GST portal. From GST portal, you can apply for the refund to the RD01 to the GST officer. There's a two process. So for IceGate registration, other portal registration, you need AD code. Without AD code, you can't choose your IceGate registration, and you can't choose your port. Port means there's a many port in India. From which port? For example, there's JNPT port in Mumbai, Jawaharlal Nehru port. So which port you want to choose for exporting your product? For example, I am sitting in Mumbai. I want to export a leather product to USA. Okay, leather jackets. So I have to choose on port. JNPT is a Mumbai, Nawasheva. It's very near to me. So I will ask assistant to my CHA, custom house agent. He will guide me. You have to pack this product in such a way. You have to make packing list. You have to see. There's some fragile product also. You have to get different certificates. You have to do a different packing. See, packing is depend upon the type of product. So your CHA will guide you to. So the port you have to choose. So while choosing the port, you require AD registration. And Export Promotion Council, I have elaborated you earlier. Like if I'm exporting a leather product, I have to register myself under CLE. CLE means Leather Export Promotion Council, Council of Leather Export. And for engineering product, IEPC is there. For agriculture product, APEDA is there. For spice product, Spice Board is there. Different promotion councils are there in India. Depends upon the product. If no product falls under any promotion council, then you have to choose a common portal of the government. Okay, commerce.gov.in. Okay. And the second part, now I want to start the real core area. From there you have to focus. This is the main thing I want to explain you. So if you are sitting at a place where you are getting disturbed, noises, please avoid these noises. Please get free, keep calm yourself, be focused, because from there I want to explain you in depth whatever God has gifted me at this age. So definitely I'll try to explain the practical things, what's happening in India. Okay, let's start. First, you have to do business registration. I have explained it till now. Okay. Second is the product research. What is product research? For example, I want to export a product called pharmaceutical. I want to export a pharmaceutical product. Maybe it is a liquid form or any other form. So for sending pharmaceutical product from India to outside India, for example, I am sending paracetamol. So in India, paracetamol is very common, everybody knows, but in some countries, it is highly demanded, paracetamol. So if I'm sending any medicine via ship, via airway, via shipway, anyway, so I have to do a product research. For example, if I am choosing the shipway, it will take at least 1 to 2 months. Then I have to decide whether my product will be sustaining while going into sea. If some chemicals are there, they have like, if you put into some limited temperature, for example, you are putting in 5 degrees Celsius. Well, 5 degrees Celsius will be able to maintain while transporting on the ship. You have to decide. Otherwise, you choose airways. So this is the mode of transport. You have to select your product accordingly. For example, you have an interest in leather product. You have to choose which is the country, they're going to import in the big quantity from India. You have to extract the data. This data you will get. There's a one website called IceGate or www.commerce.gov.in. Two websites are there. From these websites, you can extract the data. There's many websites, but this is the government website. From this website, you can extract the data, how much quantities, how much values are imported from India to other countries. For example, in leather product, the top 3 countries are there because one of my clients, they are doing business in leather product. That's what I have knowledge about this. See, USA, UK, Germany, and Italy. There are 4 countries. They are doing leather imports in a big quantity from India since many decades. So if I have chosen a leather product, then I have to select these 4 countries. Which country is viable to me? For example, USA is very far from India. So if I am sending any product from India to USA, then transportation cost will be higher. So I have to quote my client, I have to quote the buyer a high amount if I'm sending this product to UK, Germany, or UAE. This country is near to India as compared to USA. So I can adjust in the transportation cost and I can give a good quotation to my buyer who is sitting, Mr. John. For example, Mr. John is sitting in UK. So I can give a good quotation to Mr. John, and after confirmation of order, I can easily send this product. But in product selection, sometimes buyer asks sample also. For example, if you're sending a lady handbag, a small handbag, so your buyer can ask you, please send me one sample product. I will pay you, I'll pay the product cost, whatever charges are there. And I have to check the quality of the product. I have to check the design. I have to check everything because whatever you're sending on PPT, that is visible on digital. But I can, after receiving the product, your buyer's demand is there. After receiving the product, I can touch the product. I can feel the product. I can discuss with my distributors whether this product will work or not in my country. So if you're sending your product as a sample, they have to choose the product wisely. For example, see, few products are there, your buyer hardly, I don't think so, they will ask for the sample. For example, you're sending potatoes. Potatoes, tomatoes, chilies are the perishable product. So they can also ask, but they are aware about that. What natural products like potatoes, chili, tomato, agricultural product, India is producing in a best manner. The quality of Indian product for agriculture is best in the world, not for all product, for few products. So about that, they will not ask for the like for sample. They will confirm the order, dates, and quantity, and they will check definitely your company legalities also. And after that, they will confirm the order. Second thing is market. I have told you, you have to select your country. You have to get the data from IceGate and from other websites, commerce.gov. From there, you can decide which country is suitable for you. So I have elaborated you 2 things: product research and market research. So this is very important. You have to do a lot of calculation about this because if you have chosen a wrong product, or your client has chosen a wrong product, or you have consulted your client to choose a wrong product, then what will happen? The client will get a loss of the business, or either he will not able to fulfill the order. He will not come back to you. He will say, this CA don't have much knowledge. Let me visit some other CA. So you have to be very wise. You have to be 10 times wiser than your client if you're doing CA practice. If you're doing your own business, you have to be 20% wiser than any professionals, because whatever the losses are there, you're going to bear the losses. This is ultimately the outcome is there. And the second part is that supply chain management. For example, I want to start a product. For example, I want to start tea product. The production is done at Assam side, because you can buy in your state also, but the cost will be very high. But you will get the manufacturer at Assam side. So it is a viable decision for you to get the supply chain management facility from Assam to your state, from your state to your port, from port to the client buyer's country. So you have to do all the calculations, and whether the proper supplier, genuine supplier is there, whether the quality of product is there, because at international level they ask the highest, the best quality of the product. For example, the apple we are eating in India, it is not the best quality of apple we are going to eat in India. This is the last grade C apple we are eating in India. The A grade apple is very costly. Indian can't afford 1100, 1200 per kg. The international buyer are offering, 1000 rupees per kg. It is bigger than normal apple we are eating. Normal apple are produced from Kashmir side. So you have to decide your supply chain management. For example, you are sitting in Mumbai, you want to export. Your product is some spice item, spices. Just say any spice. And the spices productions are available in Maharashtra. Or you are sending mango product. Mangoes, the Maharashtra has a mass production of mango, Ratnagiri side and on that. So you can easily get the product in your supply chain management. The transportation cost will be lesser. The time consumption will be lesser. You can contact the supplier easily. You can meet the supplier face to face, sitting in Mumbai. So choosing a supply chain management is a big thing. It's not the easy thing. So you have to focus on that. Whether I'm going to take a right decision or emotional decision. These all the decision making process. In CA curriculum, ICI taught us decision making things for production, for calculation, for so many things. But ICI don't taught about emotional decision making things. While taking decision, if you're very angry, if you're very happy, if you're very emotional, never take decision. If you're neutral, then only take decision. For taking decisions, you have to do a lot of work, groundwork. You use your experiences also. You use other people's experience also. So taking decisions is a very, very crucial matter, And the fifth part is hiring good CHA, custom house agent. Earlier I have discussed to you, what is custom house agent? Custom house agent to become a any CA can become custom house agent also. If you are interested, I have to with this practice, I want to become custom house agent. There's an examination conducted by Government of India on a DGFT and our website. Look at the link. So after passing the examination, that is a very tough exam. It's not easy. Out of 1,000 people, only 10 to 12 people get able to clear this exam. It's not easy thing, okay? But the number of people sitting in the examination is less as compared to CA student. So in that way, competition is lesser. So after clearing custom house agent examination, then you can also do practice in this area also. So who is the custom house agent? He is the person who is the intermediary between you and your buyer. He will help you to arrange the transportation. He will help you to arrange all the papers, what is required for export of successful export of a product. I will explain you what documents are required for export of a product. But arranging all documents, he will help you. He will guide you how to pack the product. He will guide you when to send the product to custom port. And after reaching custom port, then CHA will help you to clear the custom clearance system after paying their fees. Government fees is there, and CHA also charge fees. Normally, in some cases, they charge 1% or some lump sum amount. Depends upon your mutual connection with the CHA. It's totally depends. It's bargaining thing. You can bargain with them. There's no issue at all. So after reaching custom port, he will help you to clear the custom process. And after that, he will give the bill of lading, like your goods has been loaded to ship or has been loaded to air. After that, you will get one acknowledgement. And after getting this acknowledgement, you can visit your bank. If you're doing transaction in LC, letter of credit, so after giving this acknowledgement and other papers also, the entire set is there, then bank will release your payment. These are very important document, and CH is very important person. For example, if anybody want to do audit, then chartered accountant is very important person to help the client for successful audit, And what is the export documentation process? I will explain later. And there's a post-export management and compliance procedures also. See, I have done my export. I got the money into my account. Now I'm doing party. No, there's other compliance also. You have to contact your bank. You have to get the certificate. According to FEMA Act, you have to receive the money within 180 days, So you have to get this certificate. You have to inform to RBI. You have fulfilled the complaint. For example, you got the export order and you have not done the export. Then after 180 days, they will get the mail. You will get the notices from FEMA department. I have heard about that. You're in the process for the export. You have not informed us. So normally it doesn't happen. But after doing export, then your shipping bill will be filed. The entire record will go into the government departments, all the departments, including FEMA. And after that, if you have not received the foreign currency within 180 days, according to FEMA rule, then they're going to make you trouble. They will irritate you. You have to be very cautious. So you have to get this clearance certificate from the bank. My money has been received into my bank in foreign currency within 180 days as per the FEMA Act. That's it. So this is called post-export management and compliance procedures. After that, you have to apply for the GST refund. You have to track the ICE gate sites. Normally in today's world, automatically things get refunded. Like ICE get transfer the GST things into GST portal. There's no much hardships. But if there's any hardships in the GST portal, there's a system you can request to ICE gate to transfer your GST things. Or manually you can visit the office, you can do your own. There's a many ways. As per your wisdom, which way is best for you. So products research, I told you, choose the product which has a potential for export business and its availability. I have explained you this thing. Example, textile, pharmaceutical, machinery, corals, millets, leather item, jewelry, gems. Most suitable for the person. What product suits you most? See, every person is compatible with different things, If anybody is there who is an engineer, the person has done CA also, he will definitely prefer machinery item to export. If any doctor is there who has done CA, he will prefer pharmaceutical things. Depends upon you. About market research also, potential country, where the export is done, depend upon that. You have to choose the product very wisely. Initially, I have elaborated, you have to choose your product very wisely. I'll tell you the reason. For example, if you are going to choose a product which is perishable in nature, for example, onions. Onion is highly demanded in Gulf countries. Onion, tomato, chilies, rice. So onion has a nature to get spoiled. If onion doesn't get the proper temperature, onions, chilies, tomato, all the vegetables. But if all the vegetable can be put in freezer, there's no problem. But for onions, you can't put into a 100% freezer things. Like you can't put the onion in 1 degree Celsius or 2 degrees Celsius or 5 degree or 10 degrees Celsius. You can't put the onion like that. You have to maintain a normal temperature, 14% or 15%, 18%, 20%, 24% is also good, not more than that. Otherwise, it will start spoiling. So there was a case of my client who has sent onion to Gulf country about 2 containers, the big container. See, there's a two type of container there, 20 into 20, 20 feet into 20 feet. The bigger container is a 20 into 40, 20 feet into 40 feet. Okay. So he has sent 2 containers of onions to Gulf countries. It was the first export for that person as bigger level. But what happened after reaching the onions at that port of UAE port? The port, I forgot the name. It's very famous. Ali something name is there. So after reaching the onion at that port, almost 30 to 40% got spoiled. It got wasted. Then the deal was on credit basis. See, normally people deal in LC, letter of credit. It is 100% safe. I'll tell you the payment terms also. I have not mentioned in the slide, but I'll tell you the payment terms also. I want to tell the payment terms first. This is very important. See, for payment terms, there's a many terms. First is, for example, you know the person very well sitting in Gulf countries on telephonic communication, on mail, on a normal agreement. You have said, okay, I'll send the product. After receiving the product, you will sell. After 7 days, you will give my money. Then I will get it into my account. That's it. But after reaching the product got spoiled. The new buyer is not going to take the product from his port. The loss is with you. You have not got the money right now. If you're taking back that product to India, the 100% product will get spoiled and you have to pay the transportation charges also. Double loss. Then what you'll do? You can't take it, you can't give it. This is the situation. So the reason of spoiling the product was that there was no proper packing. The CHA has a good connection with the custom port. They have checked random packs only. They only check a few packets, not all packets they check. Like audits, we are doing audits on random basis. We don't check everything. So like that, also they do audit on random basis. So after checking few products, they find out it is good packing, no issue. Packing is sufficient, viable. There are some mistakes in packing, but the temperature was not maintained. They have put these boxes under normal container. There's a 2 type of container, refrigerator container and normal container. If you're sending a leather product, any wood product, you can send into normal container. There's no problem at all. But if you're sending any sensitive item like fragile item, any agriculture item, any liquid item, you have to send this in a refrigerator type of container, semi-refrigerator, full refrigerator. So you have to maintain that temperature. So there was some mistakes. So there's a big loss. So in export business, if you're guiding your client, if there's a single mistake done by you in guidance, your client can bear a loss of in crores if he's a big client. Or you are doing a business, you can also get the loss in a bigger way. So you have to be very cautious. For payment terms, one payment terms I told you agreement, that is called credit payment. Second is LC. LC means letter of credit. What is LC? Mr. John sitting in UK. I have sitting in India. I don't trust Mr. John. I will send the product. He will not send the money. What I'll do? And the same thing is happening with Mr. John also. Mr. John is thinking if I'll make the payment, he will not send the money back. He will not send the product because both of them is unaware about each of them. This is the problem. So there is a solution for this problem. That is called letter of credit, LC. This is the safest way. So I will request Mr. John, please. For example, this consignment is of over $10,000. Okay, or 10,000 pound. So I will request Mr. John, please visit your bank, open one LC of 10,000 rupees pound, 10,000 pounds, and send me that LC copy on mail, on WhatsApp, whatever it is feasible. So when Mr. John will visit his bank to open the LC, then he has to deposit 10,000 pound to that bank. Like you're going to make a DD, then you have to deposit that much money to the bank. Immediately your amount will get cut from your bank account. And the person who is getting DD, once the person will deposit that DD without any fear of cancellation or dishonor, bouncing of like check, without any fear, he will get the money. Same thing happening in LC. So after creation of LC, he will send the Xerox copy. Like you are sending Xerox copy or photocopy of DD to your party. So that LC will be sent from UK bank to Indian bank. Once Indian bank will receive that LC, he will contact to you, Mr. Irshad. I got LC from Mr. John. Your name is mentioned, your cell phone number is mentioned, email ID is mentioned. Please visit the bank. Once you will visit the bank will ask you, where is the export papers? Please show me you have done the export. Now, where is the export paper? You say, no, sir, I have not done export yet. Please go do export, get the clearance from the custom department, bill of lading, all the set of documents. Once you give me the documents, then I will give you the money. Okay. Then I'll do the export. Once the export will done, I'll get the paper, I'll visit the bank. It is the hand-to-hand exchange. I'll give the paper to bank, I will get the money. The bank will give, the Indian bank will give this paper by courier to international bank in UK. Then bank in UK will call Mr. John. He will hand over the physical copy of the paper to Mr. John. Then Mr. John will visit the port of UK. He will show that paper to the custom department. Then custom department will release the goods of whatever amount, maybe 1 crore, 100 crore, doesn't matter. Custom department only needs that paper. That's it. Bank, it is a paper process. Nothing is going to happen except paper process. Okay, so this is very crucial matter. There's a 13 minutes left, so I'm counting the time also. So see it on the next slide. This is the website. On this website, you can get the data. Which countries, from which country the India is importing, exporting. You can take this screenshot, no problem. I have taken one screenshot, like for textile product, the India has exported this much in 2023-24. The rupees in lakh. So you can estimate what is the level of export is going to happen, is happening in India right now. So search supply product, I have told you, I don't want to waste the time. This is the website. On India Mart, you can get the supplier. Trade India, on Trade India portal also, you can get the supplier. On domestic suppliers. For example, you have any friends who can also help you to get the supplier, in that way. So you can contact any friends, you can attend any exhibition center. For example, in Mumbai, many exhibition centers are going to happen. It's happening on routine basis. In Bandra West, in UNESCO, it's in between Jogeshwari and Goregaon. ICI had done the biggest event there also, UNESCO also. So anybody is interested, they can visit. See, you can visit that place after searching on Google what is the date. There's a website called 10times.com. Please mark 10 times. I have not mentioned it. www.10times.com. On this website, you will get all the events detail in India, which product exhibition is going to happen at which place, at what time. Because for visitor, the entry is free. There's a paid entry also. There's a free entry also, as per your convenience. For example, you are going to put a stall, then you have to make payment for that. You have to pay rent on daily basis. If you want to going to visit that exhibition, there's no charges. In 99% cases, no charges are there for visitors. So after visiting the exhibition center also, you can contact any supplier. You can get the details of product also. They will explain you from manufacturing process to final product. They will come to know about the product, because product knowledge is key important. why you're consulting your client or you're doing your business. Product knowledge is very important. See, in C, what is the product knowledge? Knowledge about income tax is a product knowledge. GST is a product knowledge. If you don't know about income tax, GST, how you will sell your product? How will you sell your services to any clients? Same thing happened with the other product also. You have to thoroughly know about, for example, for leather, how to identify which is genuine leather, which is pure leather. For example, I have a wallet. I have to check whether it is pure leather or genuine leather or fake leather. There's many ways. For example, one of them I'll tell you. You have to put the lighter on. You have to put the fire. You have to put the fire on the leather. If the leather will burn, it is not genuine. It is not pure. It is a fake leather. If the leather will not burn, it is a original leather. In agriculture product also, if you're going to send rice, dal, cereals, so many things. See, some cereals are there, they're not originally, see, once you get the original cereal now, the color will not be that brighter than what we get into the market. It is polished cereals. The original and the pure product, which is extracted from the farmer's farming, that is different. After getting into factory, they polish it, you know, to get to make the product attractive so the buyer can buy it. So this is the problem. So you have to know about your product thoroughly. Why I'm telling you this example? Because you have to know about your product thoroughly. See, I'm a practicing CSR. If I want to consult my clients, how I will come to know about all the products? See, when you have started your practice, when you filed your first ITR, for example, in your internship, you are into audit section. You have never filed ITR, but in your practice, first time you file your ITR. What problem you faced? Many problems. Income tax portal glitches. There's offline filing, online filing. PAN Aadhaar is not linked. So many things. Have you learned it before? No. So like that way also you have to learn with the clients our product about things. This is very interesting area. I'll tell you definitely this. I go see. India is going to make a big like developed country. So becoming a developed country, employment will generate from the business. So let the business grow, then employment will generate now. So after growing the business, then country will grow. For growing the business, the professional will come into the picture. Whether it is marketing professional, sales professional, CS like you, IITians, anybody. So you have to work hard really. Don't waste your time. If you don't have any work, do something, learn something. This is very important. So these are the key things you have to follow. Hiring CHA, I have told you already. You have to search on Google. You will get n number of lists. For example, I want to search a CA. I will search CA near me. I want a doctor for general surgeon. I will search general surgeon doctor in my area. I will get the list with your help of your colleagues. Local search also, business exhibition, I've told you earlier. What is export documentation? First is the certificate of origin. I have 6 minutes, I will finish it. First is certificate of origin. Certificate of origin is generated online, commerce, the same website, commerce.gov.in. And there's many things. Let me first, that one by one I'll see. First is certificate of origin. Your CSA will help you. Commercial invoice. You have to make the tax invoices in foreign currency. That is called commercial invoice. A normal invoice also you have to make for custom purpose also, and for filing GST returns and other things also, for putting entry in tally for accounting purpose also. And packing list is very important. I've explained you. Custom packing list. There's a rules of custom department for this product. You have to follow this standard. CON. So you have to follow that standard of the custom department to fulfill that packing list. Bill of lading, airway bill. After doing export, you'll get that acknowledgement that is called bill of lading. Bill of lading means your goods have been loaded to the ship or to the air. That is the acknowledgement. You're safe. Yeah, my goods has been loaded. In this period of time, it will reach to the countries. That's it. Letter of credit, I have told you. Export order, I told you. Insurance certificate. Some people do insurance also. Will get, see, in export, there's a different concept of CIF, cost insurance rate. This is a different concept. So once you'll see, you'll type in the Google terms in export, you'll get so many things, because in this 1 hour I can't explain everything, but for this knowledge you can search on Google. Pro forma invoice, before final invoice you have to send pro forma invoice. FEMA declaration, I told you. Site entry, all this certification of fumigation, this is applicable to agriculture product. Your agriculture product is as per the medical product, agriculture product, all the sensitive product, you have to get this certificate from the government. The person will come from the government department, will check, he will give the certificate. That's it. And many lists are there, but these are the important lists. Post incorporation, I told you, you have to visit the bank for payment terms and all this thing, letter of credit. You have to fulfill the FEMA compliances. So now the lecture has been end, but I want to communication with the client. You have to communicate with your client. You have to communicate with your client. Sir, I have sent this product. I think this is the copy of the bill of lading. You'll get this product in this period of time. Please be alert. You'll get the message from the bank for collection of the documents. Please be alert. My responsibility is over as per the terms and condition mentioned in the LC. That's it. So your client will also become happy. After receiving the product, you have to take feedback also. Sir, what is the quality of my product? Have you received the product within the time limit? Have you got any struggle from my side? Because they are the repetitive clients. One of my clients, they are doing export business in 1994. Earlier they have a different C and now they have appointed me. They have engineering product. They are doing business in 1994. They have only 3 clients. Their turnover is in crores. I can't explain because I can't disclose these numbers because they are my client. It is not as per the ethics. They are earning in crores. They have only 3 clients since 1994. The big giant client. They are going to repetitive orders. Repetition is there. When it will happen? When your communication is very clear with your buyer who is sitting outside India. You can take it on the mail, on written document, on verbal, on telephonic call, Skype call. In some countries, WhatsApp call, it's not allowed. So as per your digital availability. If anybody have a query, they can contact me on this mail ID. So I'll try to answer them. You can take a screenshot of this. I try to answer them. See, if you're raising any query, so because I'm also a busy person, so I can't reply you immediately because in some cases the people are expecting immediate response. So definitely I will respond. Maybe it will take 1, 2 days, 3 days, a week also, but definitely I will respond to the best of my manner. And thank you for this one. I think the time is over. Is it 2 minutes, 1 minute, Sadhji? So thank you everybody to listening patiently. So for ICI, it was my first webinar. However, I've delivered many lectures with many institute colleges and things since many years. But for ICI, it was my first webinar. So if there was any mistake, anything done wrong from my side, so I'm really sorry for that. And I apologize for it. Thank you so much for the entire team, Supriya ma'am, tech team, and everybody. Thank you.
Thank you, Irshad. This was an excellent webinar. Export is a huge, big topic, and you covered it very well. We can take 5 minutes, Irshad, for answering some questions that have come in. I will ask only those which will help us understand this topic better. One of the questions is that are the SEI's benefits okay available for export of accounting, auditing, ERP consultancy also?
SSC, there's a 2 benefits. One for service sector, SIS for service sector. Service also is product and both also, but they have, according to Indian trade policy, there's a 5 years policy. custom policy is there. According to custom policy, they have abolished this concept, SIS. They have introduced new concept, NRTP, something new. So the person who is asking the question, please visit this website called DGFT. Get the copy of trade policy TP. You can read it. You'll get the entire things in that booklet.
Okay, next question is, as you mentioned in your presentation that the receivables after export have to come in 180 days. Are there any exceptions to this? Are certain receivables allowed to be coming in 270 days or more than that?
There's an exception, but for exception, like in COVID times, they have reduced it. They have extended time also for 1 year also. If there's any situation, for example, any family member got died, you got mentally upset, or anything happened wrong with you with your company, you can give a letter to the department. You can request for this reason. For example, if you are exporting from the country or Russia, in Russia there's a war is going on. So how the person will send you the money? So this will be the situation. So government also understand the situation. They don't issue the notices if they come to know about this. There's a war is going on in the country. So if there's a genuine situation, they will give you unlimited period of time. There's no problem at all.
Right. For which exporters is FSSAI registration required?
AI, pardon.
FSSAI.
FSI. If FSI
Huh.
license, FSSI,
Yeah.
FSI license, there are three type of licenses. Registration is state. This is for domestic business. For international business, you need to register under central government. All the person want to know which product FSI is applicable. There's a website called foscos.com. Just type FSI license registration, you'll got Foscos, FOS Foscos. On that, there's a big list is there. However, I will tell you the list. For example, there's a food product, any food product, whether it's a drink item, whether it's a eatable item, or anything. Whether it is a raw item or it is a finished product, it is applicable to all the product, which comes into food category. That's eatable item. You can see.
There are a couple of questions. They are asking what exactly is the role that our Export Promotion Council or the different boards that we have industry-wise, like the coffee board or the agri board, what is the exact role that they play in exports?
Very interesting question. Okay, because the same question I asked with my client when I initially started this area. See, Export Promotion Council is there. They help in many ways. See, first they will help you to get the data in tabular form, like how many, for example, in this month, how many export has been done for this product from India to outside India, what is the list of the client, email ID, mobile number, address, what is the value, this thing. They will help you to go and visit the exhibition outside India. And for women, they give 50% discount. So for example, you have visited USA, you will spend 2 lakh rupees. 1 lakh government will reimburse you for women. And for men also, government give 25% discount. So it is better now for promotion councils. And many things, like they will help you to get the suppliers and many things. Like they are your guardian, they will help you.
Right. Is export receivable insurance available, Ishad?
Yeah, insurance is there, na? There's a separate department by the government. Before doing export, you have to see. Sometime what happened now? You are getting one buyer. You want to check the authenticity of buyer. So there's a separate department of the government. Okay, now this is the insurance department. You have to visit the department. You have to physically submit one form. Sir, this is the data of the buyer. I want to send the product on the credit basis or on LC basis, XYZ. Whether this buyer is genuine or fake or fraud, what it. They will check the genuinity. They will give the 90% reimbursement. You have to pay some insurance amount, premium charges. After that, they take guarantee of 95% payment amount. What if your amount get stuck? You're not getting anything from that person, then 90 to 95% you get the money from that insurance. So I suggest the client, you keep your margin at 30%. But if you're getting 95% or 25% is your profit, that way.
Okay. I'll take one last question. Are there any specific set of regulations that a company needs to follow, which is involved in the business of export of, say, information technology services?
No, see, IT Act is there. Definitely, IT Act 2002. You have 2001. You have to follow that IT Act. That is as per the ethics. And second thing, if you are delivering any export service, any IT services, yeah, any software, normally America is biggest exporter of IT services from Bangalore side. Like Bangalore is the hub for that. So in that situation, there's no set of rules, but you have to follow the ethics of IT Act, and you have to follow the rules and regulation of FEMA and companies and this that thing. No, nothing is special is there.
All right. Great. Those were some of the questions that have come to us, Irshad. Irshad, we started this session with 900 registrations. We are now at 1157. This was a great session. Thank you, Irshad.
Thank you,
And
ma'am.
thank you all the audience.
Thank you. Thank you.
We will now start the next session with CA Aman Rajput. Our next session is about TDS rates and its compliance in the income tax. I'll just give a brief introduction about CA Aman Rajput. He's a certified forensic and fraud auditor and is actively engaged in knowledge sharing through his articles, which have been featured in prominent platforms like CA Club India, Tax Guru, and Taxman. He has served as a faculty as well as a moderator on various platforms and has facilitated the conduct of numerous physical events at the ICAI. He regularly keeps his readers informed about recent amendments and developments in GST, income tax, and company law. His ability to simplify complex technical topics has earned him widespread recognition, including the Writer of the Month award from the CA Club India. CA Aman Rajput, please start your presentation.
Thank you, ma'am, for the introduction. So, first of all, I want to thank everybody for joining this seminar and ICICP committee for giving me chance to explain various concepts of TDS, various unexplored concepts of TDS, and various good case laws which will really help you in your professional career. So, first of all, we have an overview of TDS, complexities in TDS, challenges faced in TDS, its rates. I've prepared a write up for all of you regarding all the rates, current rates of TDS. And at the end, I will share it with you through a QR code. This PPT and that write up will really help you. And then I'll discuss purchase of property from NRI. What are the complications and how to deduct TDS in that case? And after that, we'll discuss a newly introduced section of TDS 194T, also called Partners TDS. Then we are going to discuss changes in TDS from Finance Act 2024 and current amendments from 1st October 2024. And issues of non-compliances, notices, the main historical judgment, Vodafone judgment, we're going to touch, and uh, how to revise TDS return. Even I'll share a write-up with you all regarding how to revise TDS return. So, what is the concept behind TDS? As we all are chartered accountants, we might be familiar that why TDS is deducted. So, government can get timely tax revenue and to minimize tax evasion. If TDS is not deducted, in most of the case, like when our clients come to us and some income is not reflected in their EIS or TIS portal, we prefer not to take that income, or we are unaware that client might have earned that income. So in that case, TDS plays a very important role. So what are the objectives of TDS? First, to enhance tax collection, reduce tax evasion, and promote transparency. Now we are going to discuss the relevant sections among TDS. We'll take a helicopter view through my write-up itself about what are the sections, what the section says. Like first is 192 and 192A, that specifies for salary, and 193 and 194. 193 series and 194 specified for all other clients. So I'll share my write up with you all first. I hope my screen is visible. So I prepared this write up containing all the rates of TDS. Like for example, section 192 is for salary income. And what is its threshold? It's 2.5 lakh and TDS will be deducted in slab rates, as per slab rates. Next is Employee Provident Fund withdrawal of EPF prematurely or early withdrawal of EPF. Then threshold limit for this is 50,000 rupees and TDS will be deducted at the rate of 10% for both individuals and others containing company, LLP, partnership firms, etc. The next one is 193. It's interest earned on securities, including listed debentures. Threshold limit is 10,000 rupees and TDS will be deducted at the rate of 10%. Next one is payment of dividend from domestic companies. Now, if you receive a dividend from domestic companies, which is more than rupees 5,000, then you have to deduct a TDS at the rate of 10%. Company will deduct. Next is 194A. It's of two parts. First, from interest from banks and post office, and other is from interest from other securities. From bank and post office, if you receive interest more than 40,000 rupees, and if you are individual and not senior citizen, then TDS will be deducted at the rate of flat 10%. And if you are senior citizen or more than 60 years of age, then TDS will be deducted if your income from FD crosses 50,000 rupees. What happened was senior citizens usually put their most of the income, substantial income in FD. So to reduce the compliance burden or give them more disposable income, government has taken this step. Next one is section 194B. It's for winnings of lotteries, puzzles, or games. That is casual income. Here limit is of 10,000 rupees and income will be taxed for flat 30%. Next is 194BA. It deals with online games. There is no threshold limit in this case. And next is section 194BB, winnings from horse races. In section 194BB, there is a threshold limit of 10,000 rupees. And for online games, as I said, there is no threshold limit. And in case there is any loss in this casual income, then it will be dead loss. It can't be set off anywhere. Next is section 194C. 194C deals with payments made to contractors or subcontractors. Like if we do one-time payment, it should be maximum 30,000 to avoid deduction of TDS. And if we do aggregate payments, then it should be 1 lakh. Like for example, I paid 25,000 to person Mr. X. Then I paid 28,000 again. Then I don't need to deduct any TDS, provided it exceeded 1 lakh rupees. But if I make some payment to someone as a contract at a rate of for around 35,000, then I need to deduct TDS for 1% for individual and HUF and 2% for others, companies and partnership firms. Next is section 194D. It deals with commission paid on insurance, sales of insurance to domestic companies. Threshold limit is 15,000 and company should deduct TDS at the rate of 10% if it exceeds the threshold limit. Next is commission paid to insurance sales to non-domestic companies other than domestic companies. So TDS will be deducted if threshold limit of 15,000 is exceeded at the rate of 5%. It's for individual and HUF. Maturity proceeds for life insurance. Section 194DA. If we receive proceeds for more than 1 lakh rupees, then insurance company will deduct TDS at the rate of 2%. Earlier, before 1st October 2024, it was 5%. Now it is reduced to 2%. Payment received from National Savings Scheme by individuals. Here, in this section, threshold limit is 2,500 and TDS will be deducted at the rate of 10% in both the cases. repurchase of units of mutual fund by trust. Earlier, if any units are repurchased by trust or mutual funds, then TDS was to be deducted at the rate of 20%. Now, after assessing its limit, assessing its implications and this section properly, it was omitted from 1st October 2024. Then comes 194G. It's a payment or commission made from lottery, sale of lottery tickets. And here also limit is of 15,000 and 2% TDS rate is levied. Next is commission and brokerage fees, 194H. Here also limit is 15,000 and TDS rate is reduced to 2%. Next is rent paid for land, building and furniture. For specifically these three items, if rent is paid, then TDS is deducted at the rate of 10% if threshold limit of 2.4 lakh is crossed. And for specifically for plant and machinery, this 10% is reduced to 2%. Then comes 194I. 194IA is payment for transfer of immovable property excluding agricultural land. If amount exceeds 50 lakh rupees, then TDS will be deducted at the rate of 1%. Then comes 194IB. It's on rent payment made by an individual or HUF. IA was for those clients whose accounts are audited or whose annual receipts from profession is more than 50 lakh and turnover is more than 1 crore. Then only their 194 IA is applicable. But IB covers all the individuals. And if amount of rent is more than 50,000 per month, it's very luxurious property if amount is 50,000 or more per month, then TDS will be deducted at the rate of 2%. Next one is 194 IC. It's a payment made under Joint Development Agreement or JDA to individual or HUF. Here, there is no threshold limit and TDS will be deducted at the rate of 10%. Then comes 194J. Being chartered accountants, sometimes when we receive fees, client deducts our TDS in section 194J. It's for professional income like doctors, CAs, etc. And limit for this is 30,000 rupees. If income exceeds 30,000 rupees, then TDS will be deducted at the rate of 10% for professional. In case we receive royalty from books or films rather, then TDS will be deducted at the rate of 2% if it exceeds 30,000 rupees threshold. Next is section 194K. It is income received from the units of mutual fund, like dividends. Similarly, if we receive from mutual funds, not equity market, normal mutual fund, then also limit is of 5,000 rupees and 10% TDS will be deducted. Next is section 194LA. It is compensation for acquiring certain immovable property. If value of immovable property is more than 2.5 lakh rupees, then TDS will be deducted at the rate of 10%. And then comes with section 194LB. It's interest on infrastructure bonds to non-resident Indians. Straight away, TDS will be deducted at the rate of 5% on this instrument. Then comes 194 LBA. It is distribution of certain income by business trust to its unit holders. Here, TDS will be deducted at the rate of 10%. Then comes 194 LD. Interest payments on rupee denominated bonds, municipal debt, securities, and government securities. In this, TDS will be deducted straight away by 5%. Then comes 194M. It covers individual and HUFs mostly. In case section 194C, H and J only covers those entities who are subject to audit, subject to tax audit, like income more than 1 crore or receipts more than 50 lakh. Then only it will apply. But this section applies to all individuals. If they receive more than 50 lakh rupees for contract or commission or as a professional fees, then they are subject to TDS at the rate of 2%. Earlier it was 5%, now it was deducted to 2% by the amendment. Next is section 194N. When you go to a bank and take out money, and that amount is more than 1 crore rupees, then TDS bank will deduct your TDS at the rate of 2%. But if ITR is not filed, then the limit is decreased to 20 lakh rupees, and instead of 2%, it will be 5% after 1 crore. From 20 lakh to 1 crore, 2%, and after 1 crore, it will be 5%. Amount received on sale of products or services by e-commerce services, 194O. It was newly introduced around 2 years back. So if amount exceeded 5 lakh rupees, then TDS at the rate of 0.1% will be deducted. Earlier it was 1%, now it is reduced to 0.1%. Section 194P, it's for senior citizens above 75 years of age, getting two types of income. One, salary; second, interest income. Salary in form of pension and interest income. Then they are not required to file ITR, and their income will be taxed on their slab dates by bank itself. They will be exempt from filing ITR. Next is section 194Q. It came in 2021 October. So this section is for payment made for purchase of goods. Like if payment exceeded 50 lakh rupees, then TDS will be deducted at the rate of 0.1%. Then comes section 194R. It is also introduced from last to last year about perquisites. If you receive perquisites or any gift from anyone which exceed 20,000 rupees, then TDS will be deducted at the rate of 10%. Usually it's difficult to assess, so TDS value is included in the gift, and the person deducting the TDS submit the amount to government. Next is section 194S for VDA, virtual digital asset. Even clients who are trying to get their ITR filed by themselves are facing very too much problems in this. They are unable to assess the income properly, and it is causing problem to them, this section. So TDS will be deducted at the rate of 1% for companies or for individuals who are subject to audit. 50,000 is limit, and for others 10,000 is limit. Specified person is people who are subject to audit, receipts more than 50 lakh and turnover more than 1 crore. Next is section 194T. It is a newly introduced section, also called Partners TDS, and it will be applicable from 1st of April 2025. I'll discuss this in detail in my slide. So next comes is TDS. TDS, if we don't submit the PAN, or if SSC don't gives the PAN, then it will be 2x of the rate specified by the Act, or 20%, or current rate, whichever is higher. And in case ITR is not filed and still TDS is deducted, then TDS will be deducted at the amount of 5%, or 2x of the amount mentioned, or currently applicable rate, whichever is higher. And in case of 194N, if it is called cooperative society, then limit will be 3 crores instead of 1 crore. So this is a chart I have prepared for all of you. I'll share it at the end of PPT. Coming back to the slides. Now, TDS on immovable property purchased from NRI. Now, this is a very important concept. Even I'm going to discuss a Supreme Court judgment in this. When we purchase immovable property from NRI, then TDS will be deducted as per section 195. 195 governs that section. And entire sale consideration, like if you buy the property for 1 crore, TDS will be deducted on 1 crore at the rate of prescribed rate of 12.5%. So unlike these transitions, if we with resident sellers, TDS is 1% if value of property is more than 50 lakh rupees. But for NRI, there is no threshold limit. So earlier, TDS was deducted at the rate of 20% plus surcharge. But by last year budget, it is revised to 12.5%. As there is no specified limit in this in the section 195. Now, what Supreme Court said that let those NRs decrease the purchase component and TDS should be deducted on income component. And how income component will be derived from tax clearing certificate or NOC to be received from income tax department, and they will determine the TDS amount. Practically, it can be manipulated, but in real case, by Supreme Court, it was changed. Approach was changed from income component, it will be deducted. Now, what is the compliance process of TDS? First, TDS will be deducted. TDS certificate will be issued, which is not mandatory, but it will be issued, and then returns will be filed. Now, TDS return filing. What are the deadlines for TDS return filing? From April to June quarter, it is 31st of July. From July to September, it will be 31st of October. Sorry. And from October to December, it will be 31st of January. And from January to March, it will be 31st of May. Excess time is given in last quarter. Now, return filing process. First of all, we have to gather all the evidences, all the documents, TAN, PAN, TDS certificates. Then file TDS return through Traces portal or any software, desired software, and maintain proper records of TDS transitions in a file. Now, what are the forms for TDS return? There are I have bifurcated this in two parts. First for salaries and for income other than salary. For salaries, there is one form 24Q. And for other than salary, in normal case, there's form 26Q. If TDS is deducted for resident, like professional income, I got some professional income from a client, then he will file form 26Q for reporting my income or reporting TDS deducted on my income. And second is form 27Q. Provided I deduct TDS for some non-resident, then I'll file form 27Q. And in special cases, like there are three type of forms. I've bifurcated in three parts. First is form 26QB for sale of property. In this, even SSE don't require a TAN number. Even by producing PAN, they can deduct TDS. They are allowed to deduct TDS in this and file the return. Next is form 26QC. It's for TDS on personal rent. Next is the 26QD. It is TDS on payment to resident contractors. Now, what is the penalty of non-compliance for TDS return? If you don't comply for TDS return, then per day penalty will be 200 rupees as per section 234E. Minimum penalty will be 10,000 rupees and maximum will be 1 lakh rupees. And other interest and penalties can be imposed by the department, and even loss of credibility. Now, as I discussed in the write-up, TDS rate changes and implications we'll discuss in bit detail, including new section 194T, partners TDS. Now, section 194DA, rate was decreased from 5% to 2%, reducing the burden on taxpayers and enhancing liquidity to policyholders. Next is section 194G, dealing with lottery commissions. It will help or encourage small business owners or owners selling the lottery tickets. Next is section 194IB for rent payments. It is also decreased from 5% to 2%. It will decrease the burden for individuals and HUF. Here. Next one is section 194M. It's payment by individuals and HUF more than 50 lakh rupees. And rate is decreased from 5 to 2%. High value transitions. Next is 194O, e-commerce transition. Now we are seeing in the era of Blinkit and Swiggy Mart, everything, e-commerce transition have increased. So TDS deducted on e-commerce platforms will be 0.1% instead of 1%, like Amazon, Flipkart, few examples. Next is repurchase of units by mutual funds. As I discussed, it is eliminated to simplify the compliance. and increase the liquidity to investors. Next is floating rate bonds. Now, what the TDS rates have been changed in floating rate bonds. TDS is fixed at the rate of 10% with a threshold limit of 10,000 annually from 1st October. And these bonds are covered in the TDS preview. Now, the major important section, section 194T, which is on partnership firms. This is a newly introduced section. Although I accept there are too many problems with this section or in compliance, as it covers all the small partnership firms and they have to file the TDS and it will increase the compliance burden on them. So this section was introduced in Budget 2024 by Finance Minister Nirmala Sitharaman ji, and this section is also called the Partners TDS, aims to improve tax compliance and financial transparency. Now, key provisions for this section are the Partners TDS applies to payments to partners, including salary, bonus, commission, interest, and remuneration. It doesn't cover profit. So, threshold limit is set to be 20,000 rupees. And rate of TDS is 10%, flat 10%. Even many people have recommended to reduce this rate to 1% from 10%. And this is the case in this. Timing is TDS will be deducted on earlier of payment or credit to the partner's account. So what is the effect and coverage of this section? It covers all the partners of the firm who are getting salary, bonus, commission, and interest. So the TDS provisions are applicable to payments made to partners in various type of entities, such as partnerships and LLPs. The TDS covers payments such as salary, bonus, commission, interest, remuneration paid to partners. So, like for example, I got a remuneration of 18,000 rupees in the first month, then TDS need not to be deducted. And second month, I got 8,000 rupees. TDS will be deducted on 8,000 rupees completely. This way it will work. Now you might be thinking to set aside this section by filing form 15G or 15H, or asking client to produce this 15G or 15H of lower deduction certificate. This is not possible in this section. Rather, this is not allowed in this section. Form 15G and 15H is filed to tell deductee that not to deduct TDS. It is governed by Section 197A of Income Tax Act 1961. There is no such provision to furnish this form in this particular section 194T. And in case TDS is not deducted or short deducted, or partnership firm forgets to deduct the TDS, then they will be imposed with penalties. Like 30% amount will be disallowed in case partner is resident, and in case partner is non-resident, then 100% of the amount will be disallowed as per 40A IA. And if TDS is deducted and not submitted, like return is not filed or TDS is not submitted to government, then interest at the rate of 1% per month or part of the month will be charged. And TDS is deducted but not submitted, then it will be 1.5%. If a firm fails to deduct TDS, then it will be 1%. Now, what are the compliance consideration in section 194T? First one is record keeping. This section helps or encourages in record keeping. Now, even small firms will keep records of all the transactions. Second is TDS filing. Insertion of this section has increased compliance burden on small partnership firms. This is the drawback of this section. Next, payment to partners. TDS should be deducted under this section from payments made to partners. Issue them TDS certificate. It will track the payments. And for foreign partners, as I discussed, section 195 will overlap. For foreign partners, 195 applies if remuneration is taxable in India, while section 194T applies even if it isn't taxable due to treaty benefits. Hence, firms should be carefully navigate that 195 will apply or 194T will apply in case of non-residents. Next is decoding TDS notices. TDS notices is received in case of three issues. Three type of notices are issued. First is notice of demand, notice of non-compliance, and notice of assessment. Notice of demand indicates discrepancy or underpayment requiring further investigation and response. Second is notice of non-compliance. It deals with violations requiring immediate action as per the department guidelines. Third is notice of assessment. It is sent to the client in case of assessment issues or TDS liabilities are not matched or TDS return is not filed in. So this is a TDS portal. Status of TDS or TCS statement. First is you have to go to the TDS site, log in there by your ID, password, and TAN number, and then go to the statements, and you can check whether you have received the notice or not through this portal. Next is how to respond the notice. In case you receive a notice of TDS or non-compliance, any of the three notices if you receive, first of all, you have to understand most of the people are doing like they are generating it through AI or using these methods. But you have to carefully review the notice, carefully review the sections of what the income tax department wants, why notice is being received. You have to gather the documentation. As I said earlier, you have to maintain a proper documentation. You have to gather a documentation which you have maintained or files which you have maintained and respond within the time. Now, what are the common non-compliances in case of TDS? First is failure to deduct TDS. In this case, interest at the rate of 1% per month or part of the month will be applicable. Second is incorrect TDS deduction. TDS is not deducted properly. Then penalty up to 200% of the amount will apply. Third is delay in TDS payment. You have deducted the TDS, but it's a delay from your side or company side from payment. Then interest at the rate of 1.5% per month or part of the month will apply. And last is failure to file TDS return. As we discussed it earlier, 200 rupees per day will be the penalty, plus minimum penalty will be 10,000 and maximum will be 1 lakh rupees. Now, what if the SSC is considered to be in default? There is a term SSC in default. If TDS return is late filed or non-payment of TDS, then it will be or incorrect deduction. Then SSC will be declared as SSC in default. Now we are going to discuss amazing landmark judgment, Vodafone judgment, where Hutch acquired Vodafone without paying tax in India. So why this case is very important? It is a tax dispute between Indian tax authorities and Vodafone of $11.2 billion. It's also called Hutch Vodafone deal. It was one of the biggest controversies in Indian taxation history as quantum for demand was more than rupees 11,000 crore plus interest. Now, what were the companies involved in this transaction? It is the case of Section 195. The Vodafone had to deduct TDS in 195 as per the authorities. Now, which were the companies that were involved? First, HTIL, which was situated in Hong Kong with 100% shareholding in CGP, Investment Holding Limited. CGP was next party involved, which was situated in Cayman Islands in Mauritius, which was a tax haven country, which was holding 67% shares of HEL. HEL, Hutch Hazard Limited, which was situated in India, formed by merger of Hutch and Izard Group. Next is VIH, Vodafone International Holding, which was situated in Netherlands and subsidiary of Vodafone Group. Now, how deal was taken place? HTIL sold 100% of its holdings of CGP to VIH or Vodafone International Holdings. CGP was in tax haven, countries, so no TDS was no tax was had to be given. And then after this transition, HEL Hutch Azar Limited was converted to Vodafone Azar Limited in India. But before we continue, what does this tax haven mean? This tax haven is a state, country, or territory where certain taxes are levied at lower or no rates. Here I have mentioned some of the top 10 tax haven countries in the world. Now, what happened in this Vodafone case? CGP, which was a dummy company, as no business was conducted from CGP. It was situated in Cayman Islands, which was tax haven, as I discussed earlier. So, Vodafone International Holdings wanted to acquire Hutch Izard Limited. And how it decided to acquire? By acquiring CGP and not touching Hutch Izard Limited in India or not doing any transition in India. This was totally done to save taxes. Now, VIH or Vodafone Izard Limited was neither liable to pay tax in India nor in Mauritius. Mauritius was a tax haven country. The Cayman Island, Mauritius was a tax haven country, and India no transition took place. Hence, Vodafone acquired Hutch in India with zero tax liability. This was the issue. Now, what was the opinion of Indian revenue authorities? Indian revenue authorities said that CGP was created to take benefits of tax exemption. And Indian revenue authorities alert that Vodafone International Holding had failed to deduct TDS on payment consideration to Hutchisco. So, Hutchisco Telecommunication International Limited. It was substance over form, hence transition was transfer of rights from Hutch Izard Limited to Vodafone Izard Limited. Hence, it is taxable to India. And it was and notice was issued to Vodafone for as a SSC in default for not deducting any TDS. Now, what happened? Vodafone directly went to Bombay High Court, had filed writ petition to Bombay High Court. It was a case of December 2008. And Bombay High Court ruled in favor of Indian authorities, for which Vodafone had applied for special leave petition in Honorable Supreme Court of India. Supreme Court of India disposed the case directly and kept it in the hands of revenues to decide. Tax authority to decide the issue and jurisdiction. Like tax authorities will decide what to do in their process. Then what was the tax authority's decision? Indian tax authorities held that CGP, a holding company in Cayman Islands, was not engaged in business there. And shares which existed with them were value of these shares were directly linked to Vodafone company in India or Hutch company at that time in India. So share value of shares or value of that company was directly derived from that Indian company. Hence, it was extinguishment of rights and entitlements in HEL constituted the transfer of capital assets indirectly. Hence, Vodafone was liable to deduct TDS under Section 195 of Income Tax. Now, what Bombay High Court said? When Vodafone filed a writ petition again against the tax authorities, holding as they hold Vodafone liable, but they give the judgment in favor of tax authorities. Then Vodafone went to Supreme Court. What the Supreme Court said? Supreme Court in its interim order asked or ordered Vodafone to deposit 2,500 crore rupees in cash and bank guarantee of 8,500 crore rupees in interim order. But in final order, it opposed the opposed the Bombay High Court judgment. It said on the 4 valid points, Supreme Court gave 4 points. First, India lacked the jurisdiction to tax. India had no right to tax as it was transition outside India. Second, there is no transfer of capital asset as per section 9191I. Third was controlling interest. Rights and entitlements are not covered in capital asset as per section 214 of Income Tax Act. Last one was there is no taxable capital asset existed in India. Hence, no obligation for Vodafone to deduct tax. So, then what Indian authorities did? It changed the law backdatedly from Finance Act 2012. So, retrospective amendments were made in 3 of the section 91I, 214 section definition of capital asset and definition of transfer 247. So, in case income is deemed to accrue arise in India, if it arises directly or indirectly from the transfer of capital asset situated in India, which were the shares of entity registered outside India, like Vodafone shares were existed outside India, are deemed to be situated in India. If their value is substantially derived from assets located in India, all assets were located in India, and no business were conducted in Cayman Islands. Hence, shares of CGP registered outside India derived the value through HEL assets, which were located in India. So it changed the definition of deemed definition, income definition. Next is section 214. Definition of capital asset was changed. Property was including rights or relation to any Indian company. Here, HTIL had rights of HEL, which was Indian company, and rights were indirectly transferred to Vodafone, and hence rights were included to capital asset. Third was definition of transfer, including creating of interest in asset indirectly through agreements, regardless of whether agreement is made or not. Here, HTIL transferred its controlling interest in HEL to Vodafone via agreement executed outside India, creating interest in Indian asset. Like VIL got indirectly interest in Indian asset in this case. So by the Supreme Court judgment, they overruled by this change in law, they overruled the Supreme Court judgment. And there were 17 such similar cases which were going on in arbitration out of India, out of which 4 were in favor of taxpayers, out of which 2 were in favor of taxpayers. Now, what happened? How India tried to save this or turned down these all the things going on, and made sure that India will be tax certain country. It was tax uncertain. The transition which happened outside India about these 2 companies made the India tax uncertain country. Now, what India did from Finance Bill or Finance Act 2021, government have taken brought a clause in budget that they agreed to refund all the amount taken by the government from these companies, subject to they will not give any interest. Interest of 6% per annum is was government had to give, but they said they won't give any interest, but they will refund all the amount. And conditions will be: first, any litigation which is going on in India or outside India shall be withdrawn. Any arbitration proceedings shall be withdrawn. Next is they should give in written. All the companies should give in written that they won't go in arbitration or any of the case in future. Even department has guaranteed that that no demand will be raised on these kind of transition which happened before 28th of May 2012. So this was the Vodafone case. Now we'll go on the topic how to revise the TDS return. So when TDS return should be revised? First, there are errors in PAN or challan details. Second, discrepancy in Form 26AS or Form 16A. And prerequisites are original return should be approved, and consolidated TDS statement should be filed in Traces portal. I will be providing you the detailed write-up how to revise the TDS return at the end. And this we all know how clients claim the credit. It is automatically reflected from AIS portal or TIS portal in the client income tax domain or income tax site, and they take the credit of TDS, whatever they have paid. So we have come to the end of this presentation. You can download the presentation and notes from this QR code. I've mentioned it here. Thank you. And this was my first presentation in ICI. So any issues or any concerns, you can directly WhatsApp me, or my number is with you. So you can let me know. I will be happy. Thank you.
Thank you, Aman. A very well presented topic. TDS also is a vast topic. However, your tables and the Vodafone case were explained very well. We have certain questions. So there are questions which are specific about certain provisions. I will take them at the end if we have time. I will first start with the general questions. A very, very general question that has been asked is, when we say a threshold limit, so if the threshold limit is 15,000 and our amount is 16,000, the TDS is to be deducted on 16,000 or 1,000?
TDS will be deducted on entire amount.
Yeah.
And for few cases, it's specifically stated in law. We have to go through that.
Okay. Next is, what are the TDS provisions, or are they at all applicable in case of private discretionary trusts?
Private discretionary trust, it will be like if you transfer the trust, then TDS provision, I have to examine that for private trust. Yeah.
Okay, you can get back to the person who has asked the question. I'll let you know. Okay, in case of insurance policies, whether deferred annuities in the form of annual repayment under insurance policy, where annual premium is less than 10% of the insured amount, are subject to TDS and income tax, or are they exempted under section 10D?
A few claims for SSC is exempted, but those insurance policies which are not exempted, they will be subject to TDS.
Okay. In case of the newly introduced section on partners TDS, are partners' drawings also subject to TDS?
No, drawings are not subject to TDS.
Okay.
They may cover drawings in future, but currently it's not.
This is regarding permanent establishment in India. What is the TDS rate for professional fees paid by an Indian firm of architects to a non-resident consultant in Australia who does not have a PE in India?
It will be governed by
drawing-
section. Yeah, it will be governed by section 195. So rate could be depends on person, like 20% plus surcharge plus cess.
Okay, even if the drawings or the technical know-how can be used by the Indian firm in future without recourse to the Australian consultant, even if that is the case, it will be applicable. Okay.
TDS will be applicable.
Okay.
Subject to DTAA.
Okay. Now another case, in case of a foreign company, what will be the rate of TDS in case of payment to a foreign company in relation to installation of plant and machinery? Entity has neither provided no PE certificate nor has produced Form 10F and also does not have a PAN.
TDS have to be deducted at the rate of 30% then, in that case. Again, we'll check the DTAA with that country.
Okay, now whether which section is to be considered, 194C or 194J, in case of specialized engineering services involving some material consumption also while giving professional services, say like a contract for repair of a sophisticated computer service?
For repair services, I don't think professionals get covered in that. So for repair services, it will be 194C. For professional income like services of chartered accountants, doctors, advocates, then it will be 194J.
Okay. Now, one general question. What is to be done if TDS is deducted by the party on provision made last year, but we have raised the bill in the current year?
TDS, it depends on section. Which section are you talking about?
Well,
Which
the
type?
section has not been specified here. Section has
It
not been
depends on case
specified.
to case. Like, for example, if TDS is supposed to be deducted on payment or credit, whichever is earlier, like 194J, 194C, 194H, 194I, these type of sections, then you have to deduct it last year itself, whether invoice is raised or not. But in case it is other than that, then at the time of payment, like partners TDS, we have discussed 190, it happens when there is credit or payment to the partner, then it will be deducted. There are many other challenges also in partners TDS that we.
Okay. Last question. How do we deduct TDS on 194T? On lump sum basis, in advance, or in the last quarter?
At the time of payment or credit, whichever is done to
As
partner.
per this.
Yeah, like for example, I have given the example like you are paying to the partner 20,000 rupees, or rather we say 18,000 rupees, then no TDS will be deducted. Next time you are paying 4,000 rupees to partner, then TDS will be deducted at the rate of on 2,000 rupees. 20,000 is straight away limit. Now let's see about FAQs. We are waiting for FAQs.
Okay, those were the questions, CA Aman.
Thank you, ma'am.
Thank you for a very nice session. And on behalf of Aman, Irshad, myself, I would like to thank CPE and the organizing team at ICAI for giving us an opportunity to present this webinar. Thank you.